GETCRACK. Wake up, motherfucker.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
The Dow, S&P 500, and Russell 2000 hitting record intraday highs while yields pulled back after President-elect Trump named Scott Bessent as his nominee for Treasury Secretary. Joining us now is Loretta Mester. She is the former Cleveland Fed president and a CNBC contributor. Loretta, great to have you. So Scott Bessent, this pick, mainstream, I guess, for Treasury, but for a president with some very different ideas about tariffs and immigration. How should investors watch the way Bessent, assuming he is successfully confirmed, navigates that?
Yeah, so John, thanks for having me. I don't know Scott Bessent personally. I'm actually very glad they went with the business as usual choice, as he was called. This Treasury Secretary is an extremely important position. I mean, it affects not only the U.S. economy, but the world economy, because it has responsibility over so much, including the public debt in the U.S., the U.S. economy, overseeing, the U.S. Treasury market, the IRS, taxation policy, international, economic diplomacy, financial market functioning and regulation. And so I'm really hoping that Scott will really surround himself with people knowledgeable in those areas rather than idle. Also pick people who are going to think through things rather than being capricious and keep their focus on what's best for the U.S. economy and the stability of the financial markets. I'm also hoping that he educates himself on the importance of the Fed having independence when it comes to setting monetary policy. As you know, that was sort of discussed before during the campaigning, but I think people have been explaining why it's very important to have an independent Fed in terms of its monetary policy setting. I think they're going to, we don't know. There's a big uncertainty around where fiscal policy is going, but we know sort of the pillars that they're looking at in terms of immigration, deregulation, taxation and spending policy, and of course, tariffs and trade policy. So they have different cross currents, but even before you think in terms of fiscal policy, if you think about the U.S. economy and where it's been going since the Fed began easing interest rates, there's just a lot of positive momentum in the U.S. economy. If you look at the recent data, growth is very strong. It's well above trend now. The labor market is solid. Inflation is, yes, it's down from its peak, but the improvements have slowed. We were worried about risks to the employment side of the mandate, and I think there's lower risks now on that side that things will deteriorate significantly.
Okay,
and
how would you
higher risk to inflation? So all of those movements and the balance of risk suggest, and changes in the balance of risk suggest that the Fed will wants to continue to bring interest rates closer to neutral, but they're going to have to go slower than they anticipated. You
mentioned Fed independence. How would you expect a Treasury Secretary to influence the direction of that and communicate about it so investors would be able to tell whether he's having an influence on the president-elect where that's concerned?
Look, all presidents on monetary policy, some more than others, and that's perfectly within their purview. But things that could disrupt the Fed in terms of trying to influence policies and more than just discussing it. And I think the Treasury Secretary can actually talk to the administration and make sure that they understand that, yeah, it's okay for you to say things every once in a while about Fed policy, but there's a demarcation with which you can say something, but then actually try to enact things that will diminish the Fed independence. And so I think that's important for people to realize that there is a reason that, and this is not just in the US, there's study after study after study, and the trend is towards more independent central banking because you really don't want short-run considerations to influence monetary policy, which, as you know, affects the economy over the medium and long run. So the Treasury Secretary can be that adult in the room, if you will, who can really talk about that importance, the importance of the Fed setting monetary policy. And, you know, yes, administrations can comment on it, but it's different than trying to control it.
Now finished filling his core cabinet positions, and hedge fund manager Scott Bessent will lead the Treasury Department. The surprise was Representative Lori Chavez Derrimer as head of the Department of Labor. One pick has got the markets rallying, while the other, well, that's going to leave a few more question marks. For more here, let's bring in strategist Dan Clifton, along with Cowen's Paul Gallant. It's great to have you both here. Just kind of break this down for a second. A lot of questions around both of these. Dan, let's start with you. And sure. I wrote about this earlier, but I thought it was interesting that everything about the Bessent pick seems to be helping the markets rally, but we did briefly reinvert, and that's not his fault, but the long year fell somewhat, and the 2-year, which has an auction around now as well, did not. So I just take that as a warning point for markets.
Well, yeah, look, I think there's now certainty and clarity, and that's most important. We had about a 2-week process where it looked like Game of Thrones meets House of Cards on who was going to be Treasury Secretary. Now you know who that's going to be. So one is just a rally in there. But what you see underneath the surface tells you a very good story. We thought bond yields had to come down. You now have a catalyst for bond yields to come down and the dollar to come down, particularly as the liquidity comes in. And then if you look at specific stocks, like all of the trade stocks are up very big today. That's China, that's Europe, that's Mexico. Some of that is just a knee-jerk reaction, and it will start to revert itself back. We still believe tariffs are going to go up on China, but I think the market's starting to pull back its expectations on a universal tariff today. That's probably the right way to think about it. Trump is going to do tariffs. The question is how, and now you've got somebody who knows how to both manage the president's goals and making sure the U.S. economy does not go into a recession. And then the third leg of this is that you got to get a tax bill done. You got the largest fiscal cliff in American history. You now have a Treasury Secretary who understands these fiscal issues and the liquidity issues around this, and he'll be able to manage that process overall. So there are 3 different dynamics going on at once today, and under the surface tells a larger story than just those kind of headline numbers that we've seen.
And I know you always find ways to make it investable. So what are you telling clients about, now that we've filled in some of these remaining question marks, and with some of his tactical policies? I mean, the 333 plan would, ideally, I guess, include lower energy prices. But what are you guys actually talking about?
Yeah, look, I think from a macro perspective, you had a big rally in the dollar, a big rally in the bond yields. Those are now starting to reverse, and I think that will continue as the liquidity bazooka comes in the first quarter. So now you have a reason. That's on the macro, and if that's the case, Kelly, then some of the sector rotations can change after that kind of post-election rally, and things that are rate sensitive could start to reverse, like home builders and other areas, things that really did get hurt, stocks that really did get hurt after the election itself. And then third, we still believe tariffs on China are going to go up. So you want to stay away from those tariffs. They're having a bit of a rally, outperforming today, but they are going to get hurt. And then obviously you got to just kind of monitor what the rest of those trade issues are going to be. There will still be a lot of headline risk over Europe, over Asia, and other areas which can get hit with a universal tariff. But I think that's way out in the distance, and not something that's going to happen imminently. Those
are great points. I also think the biggest factor in some ways is going to be the direction of inflation. A lot of people would immediately look to Trump policies for that, but as we know, that's not, inflation's usually a monetary phenomenon, so we kind of look to the Fed for guidance. So maybe they will play as big a role as any kind of policy in terms of what kind of economy he actually ends up presiding over.
I would agree with that. And obviously, Trump's going to jawbone on the Federal Reserve moving forward. But now you got Bessent. He really understands these issues. He's an expert on things that happened in Japan 10, 12 years ago. And I do think that you now have some good coordination between monetary and fiscal policy. And I don't mean that in a bad way. It's just that he's a very good, he understands what is happening on the Treasury liquidity facilities. Not many people understand it. It's brand new. It started after COVID. And Kelly, as you know, this is a guy with 30 years of experience of working with finance ministers. He's very experienced in Japan. And so as we start to see that, we expect that there's going to be more foreign buyers of Treasury coming into the market, particularly in the second half of the year. That's going to enable Treasury to be able to extend out our debt without having a big liquidity rise. So he's got a really big balancing act. He's got the most challenges that any Treasury Secretary has been facing in 30 years, but he also has the tools and the knowledge and experience to be able to solve some of those issues. I think that this was a very good pick for incoming President Trump.
It is eerie how his bio and his areas of interest are kind of exactly what we need to do on the debt front now. So it'll be very, very interesting to watch and put that into practice. Dan, as always, thanks. Really appreciate it.
Thank you.
All right. So you heard the man. This is 11/25/2024. So November 25th. Okay. We're on a Monday here. Well, for me at least, my time zone. Homebuilding stocks. I put this in the description. I put in chat. You guys can look at these yourself. So yields have fallen thanks to this pick in Treasury Secretary. So these stocks looking pretty good. Let's see. I'm gonna post up the ETF chart for you. So this was the one I was in over the summer, and I was waiting for confirmation that this level 116 about there on the ETF ITB was going to hold. Now, if you're going to trade it, there is the ETF nail. Nail is 3 times that. It was up about 15% today. I don't know if it's a good time to enter, but now it looks like we found a bottom in treasuries. So let's look at the TLT right here. Yeah, it looks good. So I'm also in TMF. TMF is 3 times a TLT, and you also get a nice dividend, about 3% every quarter if you use TMF with the leverage. So yeah, you can start buying more of this if you've been buying down here at 45. I think yeah, you should watch for more entries to keep scooping them up. So if you're more conservative investment type person, but you're not that conservative, yeah, you can use TMF. That'll be good to go. Let me see. Look at the daily chart or weekly chart. Yeah, I think we hit the bottom here. There's a bottom around 42. I was afraid it might go undercut it at 38 on the TMF. Yeah, I mean this closely aligns with the TLT. Yeah, so I think we're safe, because if TLT went down to like 87 or a little bit below that, you know, I didn't want to hold too much here. So if this is the bottom, gotta wait for a little confirmation into next month, but that looks good. Yeah, that looks good. So all right, you guys can get that. And a nail, I'm gonna wait a while to consider this again. But if you don't want to do that, all the little tickers are on this. I put in a chat and in the description, so you can do ITB, XHB is the ETF if you don't want to do the leverage. And then the individual home builders like DH Horton is probably a good one to get. So DHI, that's the ticker symbol there. Yeah. Because earnings, yeah, it had a nice drop on earnings, went below 152. Now on this news, it's up. So it's above 164. Yeah, so maybe in the coming year, it'll do quite well. I think home prices are going to stay high as interest rates fall. People are going to keep buying homes. Doesn't matter how expensive they are. So these stocks for that build new homes for families, yeah, they'll do quite well. You know, there's a lot of people they'll buy. So we can talk about Bitcoin next, but I'll play another video. Let's see here.
Let's get straight to the market action with Bespoke Investment Group co-founder Paul Hickey and Unlimited CEO Bob Elliott. Bob, you're sitting here with me on set. I'm going to kick this conversation off with you after another day higher for all the major averages. The Russell 2000 playing a mighty game of catch-up. We're up 11%. More than 11% month today, and we get a record high. What does that tell us?
Well, I think it's another indication of the over-easy monetary policy and fiscal policy that's sort of juicing the markets. And in particular, what's happening is all those areas of the market that have been left behind up until the last month, it's catch-up time. And so hedge fund managers are trying to catch up with close short positions in the catch-up names. They're getting caught on the wrong side of that trade, and it's helping fuel that to drive higher, fuel things like the Russell 2K to drive higher.
The Russell, the Dow, we talk about this rotation, this broadening out of the rally. Paul, I want to get your thoughts on what we're seeing here, especially on a day where you had the bond market, you had Treasury yields move lower, but you also had that yield curve reinvert as well as investors digest Besant for Treasury pick.
Yeah, so I mean, I think today is just another example of, anything that could have gone wrong in the market over the last few months seems to be going right. And so Bob was just talking about the easier monetary policy. That helps things go right that could go wrong. But I mean, you have the economy, which less than 3 months ago, we were worried about the economy falling off a cliff, so much so that the Fed had to cut rates 50 basis points. Now we're talking about the Fed dialing back the pace of rate cuts, and the U.S. economy is the envy of the world. So things have really changed as far as the economy, the election, and even earnings season that just came by was very good. So everything that could have gone right has gone right. And now, investors are feeling very confident. So now what you have to talk about here is let's not get too excited. We want markets climb a wall of worry. So let's think of things that we should be worried about here and just to keep us on our toes. And one of the things is, despite the Russell 2000 doing very well and hitting a new high today, Brecht in the S&P 500, the cumulative AD line, hasn't hit a new high yet with the S&P 500. It's close, so it's not a major divergence, but it's something to be aware of. And then the semis have just been a complete disaster. We've always looked at them as a leading indicator of the broader economy in the market. And the relative strength of the semis is at a 6-month low, while the S&P is at a 52-week high or right near it. And you have, over the last 25 years, to find those types of scenarios, you go back to 2007, 2015, and 2018.
Right.
And all four of those periods, 3 and 6 months later, the S&P was lower. So it's one indicator. Things look very good, but let's just be aware of things that could go wrong.
So, Bob, note of caution in your voice around what stocks have done recently, and you think the Fed is wrong in its assessment that the job market is weakening in any meaningful way. So how much risk is there, you think, to the stock market with inflation, perhaps reawakening based on policy and immigration or tariffs starting in 25?
Well, I think we're in a perfect sweet spot for stocks here, where we have pretty strong growth. We have very strong income growth from household sector. And the Fed, despite indications from the data that the job market remains very strong, is very committed to delivering interest rate cuts. And they're probably not going to get stopped until there's overwhelming evidence that inflation is elevated relative to their mandate, enough to change their minds. That's probably going to take 3, 6, 9 months before we get enough data where they would start to call into question. And so a perfect sweet spot for stocks where you've got a commitment to easing monetary policy at the same time that growth remains pretty good.
Okay, so Paul, we're going to have the holiday season results in by the time Bob thinks we get any indication on what inflation might be doing or not again. So with Black Friday at the end of this week, how much do you expect the overall market to react to fresh data on how the consumer feels about spending?
So I think the Black Friday numbers that come out this week are very, the market has started to not focus too much on those numbers. They tend to be maybe like a one-day event. But I think the overall numbers are going to come in good. We're starting to see confidence numbers pick up as far as the sentiment surveys are concerned. And so I think that's going to create some strength. Retail sales have been coming in better than expected. And I mean, just look at the retailers today; they've just been on fire. So you have you have the consumer discretionary sector up over 1%, even as like Tesla, one of its largest components, was down pretty sharply on the day. So that's some broad-based strength within the retailers.
All righty, guys. So let's look at Bitcoin. Let's look at this chart here. So I got the Wyckoff chart, and you look at what happened today. So I told you yesterday night, be ready to do what you can, short or long Bitcoin using MSTR. Okay. So we have MSTR right here. Okay, let me go look at the 65-minute chart. You can see what happened. So on the open, it couldn't even get close enough to that green line. 445 went straight back down. And at that point, you would have realized, yeah, it's time to short, because it did recover from 380. It went back up, but that was it. It's over. Because if you looked at the pre-market on Bitcoin before the whole stock market opened, it was already dropping. So you can see this as this chart. Let me do this. So you see that UTAD test or whatever? That's kind of what happened this morning. So now I'm going to remove that. So you can look at this whole distribution as it is. I mean, we had a really deep cut on Sunday and it recovered. But as you can see, a few hours before market opens, it does this. It gets up to around close enough to 99 and it immediately drops. And what happens is it drops below this purple line set here, 97,600. And if we go look deeper, so I used the wrong hourly. I used the 40-minute here. I'm not going to use the hourly. So if I use crypto, I use 40-minute. Okay, you see it start curving down, comes through here, and then can't even hold it. So at that point, you have to decide. Here was when the market opened, right here, this candle. At that point, you would have decided, yeah, I'm going to short MSTR again for the day. So that's what I did. And I could use MSTZ. That's one way. So this is the 2x leverage. So you could have used that. So once you saw this, you would have bought here at like 77 cents, would have got out. If it came back, you would have did it again. I don't know. Depends on how much time you have during the day, but you could have done it twice. And that's about it. If you were really clever, you could have done Mara too. So Mara, like on that initial dip, it went back up. So you could have been long on Mara or something like that too. You could have done it both directions using Mara, or you could use MSTU. So that's 2x MSTR. So if you were really fast, like you would have caught this and you would have been like, oh yeah, I'm getting out, going back long, and then wait for it to go back into this like downtrending move here. So I'm going to use 13-minute. Here, 13-minute chart. You see this? So for the stocks, I'll use 13-minute chart. You can use 10 minutes, about the same thing. So it goes down, but then it bounces back up. You know it's going to have trouble here. Then you would have shorted again, going back down. So you could have did, if you were fast, yeah, you could have did both ways. And that's kind of the problem. I'm not a day trader, but I'm just showing you guys like you can, if you got hella screens on in your room or something, and you got I mean, I guess you could do it on an iPad. And if you got options, that's even worse, right? You got to figure out what options to use really quickly on this stuff. Yeah, sure. Do you have a recognition from the I don't know, he said Bitcoin's going to 0 or something. So Daniel Nixon, that's what he said. Yeah, that's about it. I think he's just a bear. It seems like he's a perma bear. So he thinks everything's gonna go down just because, you know. You have anything to buy for Black Friday? Yeah, so Black Friday, I'm going to go long on all the Bitcoin crap again. So I'm going to show back the chart of Bitcoin here. Okay. So I think we're done. I think we're done with this move down. That's what I'm expecting. That's why when Juan was telling me like, oh, you want to get back in Dogecoin? I'm like, nah. Dogecoin, like F that. Wait for this, because that's what I expected. Because remember, this week we have options and futures expiration for Bitcoin and Ethereum. So remember, the crypto world, the big week where things like have a goofy feeling is the last Friday, the week of the last Friday of the month. Stocks and the rest of the indexes and futures with commodities like gold, silver, whatever, all that stuff is the third week, okay? The third Friday. So that's why there's a difference. So that's why we're having this kind of effect now. So if you look at IWM, they were talking about that in the previous video. You see the drop, right? Last week. That's what's happening now with Bitcoin. It's going to drop and then you buy and it's going to reverse like in December. All right. That's what I think. I don't know. Like, let's see what happens. I mean, it could just crap out completely. It might just like cut through here, go through 89, 86 and just die and go back to, because like this is where the market makers want it to go. It wants it to be as close as possible to 75,000. That's where all the options will get killed. Every call, every put that people gambled on for this month will get wiped out if market makers can push it to that level, 75. I doubt it. It has to be some crazy news to push it that low. So what I'm thinking is like they'll try to get it towards it as close as they can. So like worst case, maybe it drops to 90 by Black Friday, right? Maybe you have a deep cut down here and then it reverses really quickly because crypto will move fast on you. So I could believe it. I could believe some flash crash on Black Friday or Thanksgiving, and then people are just going to freak out or something, and it'll cause that kind of, it's easy to manipulate on crypto because it's all based on emotions, right? And it trades 24 hours. Anybody could do any kind of news over Thanksgiving while they're at the dinner table and they're like looking at their phone and start freaking out and then like just press sell. And then you have all those idiots start pressing sell while they're like, they got gravy in their mouths. So yeah, that could happen. I believe it. I mean, you could do that in the crypto land. So prepare for Black Friday. If Black Friday got a good deal, yeah, I'm long. So in the stock market, there'll be half day on Black Friday. It'll be open for half a day. So it'll be open in the morning and then close early. So if you get a lot of stocks that are related to crypto, you can get some good deals in the morning, you know. You can, so watch out for that too. So there could be some nice deals. So I'll be watching those. But I think we're done. I think we're done here. This is what I expected. So this drop here, I mean, maybe I should do some analysis on this with the point and figure and say like what target, but it dropped to my 92,720 area, which was set here. So, I mean, it hit it exactly. I see no reason why it would really want to go down to 89 unless there was a flash crash, but just in case, prepare for it. So yeah, I'm out. So MSTR, it could go lower. This could still go lower. So even if Bitcoin recovers, the way the chart looks at MSTR is looking pretty bad. I might still keep shorting this thing for the next couple of days because if you look at the momentum in the MACD, this thing is going pretty far down, very steeply. You see the two parallel lines, the blue and the red are wide apart, and they're going parallel very nicely. There isn't really a lot stopping this thing. So even if Bitcoin recovers tomorrow, let's say Bitcoin gets to 95 and gets stuck there and just bounces between 94, 95, 94, 95, MSTR could still go down. So you could still keep shorting it every day. Just keep shorting, like in the market open, just be like, it barely recovers again, short it. Barely recovers again, short it. And just keep doing that because you can get like a quick 10, 20% on MSTZ every day. Like you can keep doing these moves, right? Just go short, and just keep doing that. Okay, that's enough of the crypto stuff. Let's talk about my favorite stock, MSMCI. Well, it stayed above 35. It opened above 35. It stayed above 35. So at this point, I would say if you're a risk taker, switch over to SMCX. This is 2X SMCI. So I think, let's see what we can do here. So I think we're going to bounce around this range between 35 and 40 for the next week, maybe into December, but I don't know. Maybe by Black Friday, people will just keep pumping SOX L because tomorrow we have ADI earnings. ADI, analog devices. It'll have earnings tomorrow. Let's see, tomorrow morning. So that might have some effect on the semiconductors. SOX right now is a little stuck, but it was positive today. SOXX. So if you're in SOX L, yeah, keep holding it. Like, see what happens. The problem today was Nvidia. I think a lot of the options guys had to get, like, they ran away on Friday, and the rest of it is just, it's just a reaction to that. So usually the Monday after a big options play, like that Monday, it'll just, yeah. So a lot of people were betting on that Friday. So this is kind of like how the third Friday has a big effect. So Nvidia is such a big stock that people just treat it like a toy, right? So they were all doing for earnings last week, and when it didn't move, it was supposed to move plus or minus 12%. None of that happened. So all the call guys, yeah, they're done. They got toasted, so they have to sell, and then this is what happens as a reaction. So whatever they got rid of on Friday, this is the reaction to it on Monday. And all the put guys didn't even get what they wanted to, because if they got a bad strike price, I think, yeah, this is what happens as well. All of this stuff is just to wash away all the noise. So I don't know what Nvidia will do in December, but if it starts recovering, because you already see a divergence here. So SMH was down 0.39% at 243.66, but the SOX was up 0.98% at 218. So once you see this divergence, that means Nvidia has less and less of an effect on semiconductors. So if the rest of the semiconductors move up on the other earnings we're going to have coming up in December, Avago, which is Broadcom now, so AVGO, Marvell, MVRL, I think, MRVL, my bad, and MU Micron. So all of that will be December. So those are the last three big ones. So after ADI tomorrow, those are the big ones to watch. I think this could just creep up. So this is kind of the dog of the market now. It was the darling of the market up until July, and now have been going nowhere since then. I think it'll recover, but the real winner are small caps. So last night I was talking about small caps. I was talking about what's the other one I was talking about? XBI and all the trash things like that. Oh, mid caps too. I played that video. So IWM is the ETF for small caps. It's up. Now, I guess I shouldn't have sold it on Friday, but XBI's like leverage ETF is LabU, but I sold it because I didn't care. I mean, I have HIMS, so I'll show you HIMS later. HIMS is better than LabU. You know, LabU is up, like, was up in the morning, what, almost 10%? Yeah, I guess I shouldn't have sold it on Friday. Yeah, 8%. Okay, 8%. And if you look at ARCG, the genomic one, it was up 5%. So this Kathy Woods has all the DNA, CRISPR manipulation, like eugenics companies and testing companies like that. They're all up. So that tells you something. The other thing that was up were banks. Banks are up. Banks up almost 2% today. So banks, home builders, ITB, we were talking about home builders, and XBI. So all the interest rate sensitive sectors are up, and this is very good. So if we're going to look at HIMS, what happened to HIMS today? HIMS was up 23%. So if you were buying down here around 19, yeah, you're up nicely. We're back to the highs of November 12th. Now, I sold some. This is a good swing trade because it's already up 50%. I think it can go a lot higher. I'm not sure yet when it will do that because XBI still has a lot of work to do. It's not out of the woods yet. It had a lot of damage from the RFK nomination and all that. But, you know, it's bottom feeding time. So there's a lot of crap stocks like Moderna that hit lows, $36. So, you know, no one has COVID vax anymore. This thing has given up most of its gains from COVID. So let's see. COVID around here, $19.42. It's at 43. So I'm watching this trash because, like I tell you, bottom feeding trash companies have done quite well. Nova was up 9%. Solar energy, right? Trump gets elected, it drops 45%. It's recovered. That's a good trade. So I'm telling that a lot of these tax loss people that have sold because they were like, oh man, I gotta capture all these losses because I bought up here at $11, $12. They're gone now. There's nobody left. So I would say, like, yeah, if you didn't get into it, you gotta watch it. It's probably gonna pull back. Nova, you have T-Doc, garbage company. This company is so bad. It used to be hot in 2018. It's so bad. It's dropped since $300 in 2021. Look at it now. It's trying to recover. You see that? So on the weekly chart, we're back above these moving averages now. I got to say, T-Doc is looking good. So I was talking about T-Doc. What else was I talking about? RX. Oh, it was down below 5. Now it tried to get above 6. So it was at 650 today. It was trying. It's trying. So RX trying. So this is the AI drug company where they develop drugs using AI. So watch this one. And there's a lot of them scrolling on the bottom of your list, banner right here. You look at them. So I call them bottom feeder stocks. What other ones we have? NVTS. It popped last week on news, and now it's up another 15%. These garbage stocks that have been going down for a long while. So this used to be a SPAC at 21 something dollars. It dropped to, what was it? $1.78. Oh man, yeah, put that on your list too. These things can really fly. Once the interest rates start like really pushing that back down on bonds, this trash is just going to go up as a reaction. Same thing with the dollar. We got to look at the dollar. They were talking about in the video the dollar was too strong. That's right. We hit a limit here. So September, October 2023, on Friday, we went over and we came back down. We have to watch that the dollar does not get too strong. The last high, October 23, and any other highs? Yeah, that's about it. We don't want this thing to get any. We want it to stay in this range between 100 and 105. Stay in this area. And once you see that, that'll be good. Also good for Mexican stocks. So EWW. So if you are wanting to get in, they mentioned Mexican stocks. I think you can use the ETF now again. MEXX is 3X EWW. So if you want to do just the ETF itself and trade it, MEXX looking good now. I may buy a bunch more of this. I've been buying little by little last week, and I think this was the news I needed to hear with the Treasury Secretary announcement. Let's see what else. I'm not sure about Chinese stocks yet. I mean, I'm looking to get it back in because I was shorting it up here, and I got out already on my short. It might be ready, but we'll have to wait a while. Yeah, Trump's kind of more of a wild card for Chinese stocks. It's definitely tradable though. I've been mentioning one in particular, KC, right? KC, the gravity defying stock. It's about $7. It's at this range where it's going to break out. It really doesn't follow the other Chinese tech stocks. So this thing, if it really moves and it wants to move, you see that? It hasn't been in this level since March of 2023. If it breaks out again, I don't know if it's going to go from $7 to $70, but hey, I've been surprised before, like Carvana, right? Like Carvana is the stock that, I got in down here, but I didn't know it was going to go up 6,000% like a couple years later, but hey, it did it. So yeah, there's a lot of potential out there. And anyway, so as far as Bitcoin is, watch this area. It's going to bounce around here. I don't know if it's going back down to 90,000, but yeah, keep that in mind. So we're going to have to go over all the crypto stocks like Mara, MARA. It hit its top, pulled back. It looks good overall. It's building its base here. This means like once Bitcoin wants to go back to 100K and above, probably maybe 130,000. If it can do that in December, I'm not sure. It could just be the end of it. It's just going to go sideways, and you're better off trading Dogecoin and all that. But if Bitcoin is still dominant and wants to go up to 130 into New Year's, then yeah, get into this Mara and other like we'll go over the other ones some other time again because I already mentioned them. But Mara, CLSK, those are the miners to watch. This one right back up here to where we were in February. Like it's trying to stay up there. So watch that one, CLSK. And Wolf, yep, Wolf's still good. It had a breakout already. WULF and what's the other one? Core Z. Yeah, Core Z is kind of like its own thing because it's a relatively new one, and it's not only just mining. It does some AI, it does some data center stuff. So it's kind of a catch-all stock, but it does pretty well so far. So watch that one. And Hut had a good earnings. Hut probably so far had the best earnings out of all the crypto miners because once it had its earnings, it held. You see, like it bounced up to 25 and it's holding it. So it's above that 18 level here. Yeah, it might shoot up to 90 if we have a good run on crypto. So there you go. Keep that in mind. HUT. Okay, so since we talk about crypto, let's go to another video.
Bitcoin retreats to the mid $90,000 level. MicroStrategy adds to its Bitcoin holdings. And Hashtag's co-founder and chief operating officer Bruno Caratori discusses post-election trends in crypto portfolios. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets are mixed this morning. As of noon Eastern, Bitcoin was down 0.5% at nearly $96,000. It languished over the weekend, falling into the $95,000 level after hitting a fresh record Friday, just a couple $100 off the widely anticipated $100,000 mark. Solana also under pressure, losing more than 1.5% after it also hit an all-time high Friday. Ether, the outperformer, climbing 5% to nearly $3,500. Okay, let's talk about the top stories. MicroStrategy announced yet another big Bitcoin purchase. Today, the company disclosed it acquired 55,500 Bitcoins last week for around $5.4 billion. That brings its total holdings to 386,700 Bitcoins. The stock faced some volatility after Citron Research revealed a short position on Thursday, saying MicroStrategy is overheated. As of noon Eastern, the company is down 3.25%, and in 1 week, up 6%. Bernstein hiking its price target on the stock today, though, to $600 from $290, implying another 40% upside at least for those shares. Finally, the SEC continues to experience some shakeups. Commissioner Jaime Lizarraga, the next to announce his departure, he said Friday that he plans to step down January 17th, just a few days before Inauguration Day. Lizarraga implied he's taking the time to focus on family as his wife battles illness. He thanked his fellow commissioners and said he's proud of the agency's accomplishments in advancing Chair Gensler's agenda and in fulfilling the SEC's mission. The announcement came just a day after SEC Chair Gary Gensler said he would resign on Inauguration Day. Investors, of course, anticipate a regulatory shift in favor of cryptocurrencies under President-elect Trump, who campaigned on the issue. All right, for our main story, last week I spoke with Bruno Caratori, Hashtag's co-founder and chief operating officer, about how crypto investors are shifting portfolio strategies after the U.S. election. He also talked about what impact the incoming Congress will have on the crypto industry.
All right, Bruno, thank you so much for joining us today. Let's start with what you're hearing from clients in the wake of the election. Obviously, the rally has driven up prices. So what are you hearing from clients, and where is the excitement centered? Is it just Bitcoin? Is it altcoins? Is it ETFs and other products?
Tanea, it's great to see you. Yeah, we've been talking to clients a lot for the past few weeks. There's, of course, a lot of curiosity and excitement, especially due to the big price movements, right? And I guess most of them are looking to learn, what's going to happen next, what these election results really mean for crypto prices. and if the current price swings that we're seeing going up are sustainable. So these are the conversations we're having, and they're making up for a lot of interesting outcomes.
So what is your big takeaway or your big like your key point for your outlook next year based on the hopes that are driving the prices up right now? The hopes on the promise of a more supportive regulatory environment. How do you see that playing out, since it does seem like there's this divergence between Bitcoin and everything else? On the one hand, you have an entire industry that's been begging for clearer regulation and rules to play by so that their businesses can thrive. But then, you have this idea of a strategic Bitcoin reserve, which really, I think, kind of hit a fever pitch in the week after, and is perhaps more focused on profits and prices than the problem at hand.
So, Tanea, I think you hit it spot on with regards to regulatory clarity. What we bring up with clients when we talk to them is, first of all, we urge them to always keep a long-term mindset when dealing with getting exposure to crypto assets, right? And we think that when we look back to what happened last week, and especially with what will happen in the coming 12 months, we will deem that 2025 will have been this pivotal year in crypto. And the reason being exactly what you mentioned. I think after years of administrations that have either been dismissive or just flat out hostile towards crypto, we're poised to welcome not just a new president, but I think most importantly, a new makeup of Congress that's poised to recalibrate the regulatory attitude towards crypto in a way that's going to give these assets a completely new reality to work with. So this is going to take a while to play out, and this is what we're trying to convey to our clients. There will be wide swings along the way. But as the new Congress takes office, as the bills that have been poised to pass Congress for a while in the US, both the stablecoins bill, the market structure bill, as they hopefully indeed get enacted, we think that then, more importantly, beyond Bitcoin, assets will have a new environment to thrive. Because the truth is, outside of Bitcoin, Tanea, for years now, there's been this dark regulatory cloud on top of every asset, on top of every project that's seeking to issue a token, either to build a community, to share rewards. But these projects, these teams, have feared the regulatory action from the current administration. And with the new recalibration, we think that this is going to be a lot more transparent, a lot easier for projects to understand, and these projects will be poised to thrive. So it will take a while, but we're conveying to clients that the outlook is very positive in the medium to long term.
Well, let's dive into the post-election recap that you published after the election. You argued that crypto will continue to be a political force. You've said that a little bit just now. How much do you think that voters in the U.S. care about crypto, since we've seen conflicting data from the industry that claims it's a key issue for many voters, but then data from the Fed and pollsters that shows that not many Americans actually hold it?
Interesting. We've seen this conflicting data too, but I think the unequivocal conclusion, Tanea, from this last election is that crypto is a key issue for the electing body, right? And will continue to be the case. More and more, as individuals and families in the United States become acquainted to technology, start using it in their day-to-day, they will understand that crypto is something to be harnessed and not combated. And I think we saw the sea change in this last election, but that we expect will continue to grow in the coming elections.
The other thing you point out in the report is a generational shift as younger generations become less skeptical of crypto. So some of those in the younger generation are coming into Congress. How much impact do you expect them to have in legislating, especially when you have some of the more powerful figures in Congress as skeptics?
It compounds the impact, certainly, Tanea, as it won't surprise you. that there's a big correlation between a negative attitude towards crypto and the generation you are. Younger people are more comfortable with new technologies. Younger people are more comfortable with Bitcoin. And as this permeates now government, we think that will continue to have an effect. So that generational shift is certainly a force that, again, it doesn't really play a role in the short term. But as we've been seeing for the last 10 years in crypto or so, it will continue to play a role in the acceptance of the technology, the asset class, and we'll see the results of this across the space.
And then, you've said it's early in this process, but what are you watching for with prices in 2025 as the next Congress takes office? You said something about price swings a little bit earlier. So I'll re-ask the question, is there more volatility in the cards as we work through what's coming from Congress? And then especially as you contrast that with the demand for Bitcoin ETFs, which launched earlier this year. They've been really successful, and we're starting to see that demand pick up more and more, especially with the election results. The idea was that, the demand from those ETFs would eventually start to bring the volatility of Bitcoin down. So how do you square those two things, and what are you looking at for 2025?
Again, as we comment on prices with our clients, we always urge them to keep the long-term focus in mind. It's hard to predict what happens in the short term. I will note that as early as a couple months ago, options markets had, the implied probability of Bitcoin being at the level it is now, between $90,000 and $100,000 at just 10%. So you can see how things can change quickly. This has changed in less than a month, I think, Tanea. But here's our message to clients is, as Bitcoin and other crypto assets continue to evolve from a technological standpoint, continue to gain adoption, the potential price increases are really large. In one way of estimating this top down, if Bitcoin becomes indeed a store of value that is as meaningful as gold, it needs to be valued at least $1 million. So this is, of course, if this is poised to happen, it will happen over many years. But now, I will say, though, that in the short term, the direction of travel seems positive. Even with the pure results, Tanea, of this election, I think one immediate result is that agents who were outside are continuing to be more welcoming towards crypto. We know that since the ETFs got approved earlier in the year, not every type of investor has been gaining access to this, has been taking the leap. But more and more institutional investors, large wirehouses, are going through the process of approving these. So we think that in this adoption of the asset as an investment option alone, there's a good price increase that will materialize in the next 12 months.
Okay, that's all.
Right. Pump. $1 million. Of course. Bitcoin will be $1 million, man. So anyway, into present day, I'm watching this level at 95, see if it goes back down to 93. And if Black Friday pushes it lower, we'll see how it goes. But again, if you want to day trade it, MSTR, looking at this, the way the chart is right now, I would just short it over and over relentlessly. Let's go back. Yeah, relentlessly. So if it goes back up tomorrow, short it again. Just short it again. Keep shorting it. So you got 2 more days, trading days. All right. You got 1 full day before Thanksgiving. So if you got time, you're bored, keep shorting it. And I use MSTZ. You can also use SMTS or something like that. MTMS. Micro strategies, MSTR2X. Yeah, it's SMST. Yeah, you can use this one too. Either one's fine, but it depends. Like some accounts, I can't use anything that's a penny stock. So MSTZ is like $1 or less right now. So that's why, if depends on your account set up. Yeah, some places won't allow anybody to trade anything that low, so then you can use SMST. Yeah, SMST. So yeah, I can show you that thing there. Like, I forgot to mention Bumble. So dating app Bumble. So earnings on August, it went down to $5 about. Now it's at 9. Another bottom feeding trash stock that could do quite well in January at least. Because the way it's moving, I think it can pull back to 7. If it goes back to 7, buy it. So put that on your list. BMBL. So a lot of garbage companies. I don't have much faith in any of them, but you never know. Maybe one of them will become like Carvana. Like I said, I thought it was a trash company. Went into December, going to the lows, pulled back up in January, went back down, and just flew ever since. So you might pick something that really works out in the longer term early on. So that's it. What I said about Palantir. I mean, a lot of people thought it was garbage, but hey, I bought it doing the same strategy in December, right here, November to December 2022. So I said buy around $7. I told people to buy it $7 and below, eat it up, and then finally it rockets up, and we're doing fine now. Palantir. I mean, if you want to sell it, I guess you could wait until New Year's if you got tax implications. I don't know. That's up to you guys. But I think we're done for most of the year for Palantir. Exxon, yeah. I mean, did it have it? Yeah, it kind of had a moment like that, but not really. I mean, this thing didn't go down in December's, right? No. This had a different feel to it. Went down in June, but went up into 2022. So this actually had a low in the summer. Yeah, the 2022 was an interesting time. Maybe we should have a discussion on the 2022 era of stocks, because some stocks bottomed in the summer, some bottomed in the summer and then had a retest in December, some had to go down even lower in December of 2022 and before it had a rocket. So yeah, we could go over some charts on that time as well. Okay. Yeah. All right. So let me see what I'm gonna show you. I'm gonna show you what I traded today. So let's put up the Monday trades and stuff like that. So you can see what I did. So all in the open for you guys. I got hymns, right? So I put this in my parents' account. I sold some. So this is up 52%. That was a swing trade. MSTZ, that was a day trade. SMST, that was a day trade. So that was all doing the MSTR short. Now I added a short for natural gas. I'll talk about it next. GameStop, I still holding. SMCI, I'm still holding. I'm moving out into SMCX 2X. So I think today was a good confirmation of things for SMCI. So if you want to get your leverage, so 2X SMCI, use SMCX. Okay. Okay, let's go look at natural gas today. Let's look at that. So today we had a pop. So that's why I sold my cold on Friday and I re-enter cold again. So let's see what's going to do. It's going to have, I think it's going to have an expiration. So the natural gas Henry Hub will have expiration on Tuesday, right? Tuesday, tomorrow. So let's see what happens after that. Right now it's been hanging around above this red rectangle. I'm gonna short it again. I don't know why not. I mean, it might backfire on me, but yeah, because it keeps trying to hold up. You see this? It keeps trying to hold up this level, but eventually, I think once we get closer into December, it'll sell off. Yeah, winter is not a good time to be long, and summer, same thing. It's not a good time to be long natural gas. So, and you might get some opportunities in the gas, and so that's why I said the gas and oil sector. So we're gonna have to wait a while and see how this goes. And I mentioned some gas stocks already last week, and you can go back and look at them, and I'll mention them again when they're ready to buy. Okay, so we have a lot of gas stocks to look at, but I usually use oil U. If I'm just doing ETFs, I'll use a 3x. So then if it hits a bottom again, I'll just go long. But I think it's not right now. We're not at the right time. You should be focused on the tech and penny stock type stuff until next year. Then we can decide if we want to really go hard on the natural gas. Yeah, GME wants to break 30 so bad. Yeah, I know. I want it to be done before earnings. I do not want to hold that trash before earnings. I have no, like, usually most of the time earnings on GameStop is not good. That thing better just pump out of nowhere on Reddit saying some crap, because usually that's what happens. Reddit will hype it up before earnings, say something's going to happen, blah, 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 and then it just shoot up. Get my money, get out. You know what I mean? That's it. But, there's other things other than GameStop. We've seen them. With the quantum computing. I think the quantum computing kind of died today, sadly. I mean, QBTS, it tried to get above $3.50. You see this area? See that? This is like a long-term resistance. Yeah, and then you got Qubit. Like these things are crazy. Like I don't know why you want to be in these things but with all that volume that's coming in, it's just easy to just push up these penny stocks. Like, what the fuck? 300%. This is yeah, all right, man. I don't know. Yeah. I'm just looking at these are like IONQ looks like it has trouble now. Now that it's up here. So IONQ, so yeah, but there's a lot of other ones. So look at Bumble. Bumble. I don't know. Dating app, right? I think this is probably a garbage company, but hell, if I could trade it, I'll trade it. I'll trade that chart. I'll trade this trash chart, man. This is how it goes. So you get an idea, right? You get a feel. You can day trade, you swing trade, you can do whatever you want. All you gotta do is look at the chart. You look at two squiggly lines: 18 moving average, 40 moving average. That's all you gotta do. Look at the candles, see what they're telling you. Let's look at MSTR a bit here. Look at the way it is. Like, you see how it does this candle right here in the opening hour, right? So 65. But let's go to 13. Let's go to 13. And you see this quick whoosh down. And the close on Friday was around 421. And then it tries to climb up right back. It recovers. It hits the 380 area, goes back up. But it can barely get above it before the next red candle shoots it back down. And you see this area here? Like, every time it goes through this rectangle, it tries to get up. It spends some time there before continuing. Now today, it couldn't even recover past 430. And now it closes at below that rectangle. So that's why I'm telling you guys, just short the shit out of MSTR. So as long as Bitcoin still looks weak, just short it. Short it. Short it until it goes down to 320 or something. I have no idea how low it's going to go, but I swear it's going to go that low at least. And then you can go long, right? Black Friday, just go long and then go ride it back up. I don't know. Bumble should tell. Yeah, that's why I said HB about the Bumble. Because Match is the same thing. Tinder, Match, same thing. Trash stock, bottom feeder stock. See that? Look at it. It's been at the bottom since May of 2023, just dying here. It used to be like a $180 stock. Now it's 32. So same thing. Complete trash. But hey, you can trade it. I think a lot of people will be like, this thing's already been bottoming so long for a year. Might as well give it a shot because there's no sellers down here below $27 or something. Nobody wants to go below than that. This thing has a longer history than Bumble. Like, it used to be a $8 stock. Well, someone's trying to hold it up at 30. Who knows what that is? So somebody thinks it can go back up to 160. Shit. Why not, man? Well, let's look at the strip club stock. Rick. Let's see how that one's doing. Oh, well, yeah, this kind of bottomed out around July. 39 is trying to get back up to 53. Maybe strip clubs are coming back, man. You know, Whoremaxers like making it rain all day in Vegas. You know, by Rick, RICK. There you go. Maybe economy's coming back. Hoflation, whatever. Just pay more money, man. We got a lot of hoflation going on. Okay. All right. Let me see. What's the next video? I got another video. Man, I want to play this longer video, 1 hour. I don't know if I can do it tonight. Oh, man. Like with Samantha LeDuc, because even I haven't even gotten time to go through it. I think it's a very important video for people to watch. Restaurant owners have shares in Tinder holding it up. Yeah, restaurants are really a bad company sector right now. I do have a video on Red Lobster. They got a new CEO. I think he has some interesting things to say. Let's see, blah 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 blah. Man, let me find it. What is it? Where is it? I got a Huawei one too. Oh, I got mortgage. Yeah, I got mortgage ones. Oh, this is important. The mortgage ones are like, put it on 1.25. Yeah, I can't do that with the uploading because I have to do the uploading ones. I mean, it's better you just listen to it. Like, yeah, because when you see how she looks at the market, that's what you want to be. You got to be at that level of looking at markets. Like, you do that. So that's what I'm telling you. Chart reading is one thing. Looking at the intermediate type of stuff is another thing. There's so many ways to look at things that, you know, we have to build upon different levels. Yeah, once you get there, you can get it. Yeah, it's really important. And that's why I said Master Kim was asking me, like, who would I recommend? And if someone was like really wealthy, like he was saying, like, you know, his friends, you know, it's like all that. I said, well, if they're really that wealthy, they shouldn't even waste their time studying how to read charts and whatever. Just pay someone to do it. And that's what, if you really had to, if I had a recommendation of who to pick, it will be her. Yeah. I haven't really seen anybody that's good.
From the yield curve to the business world, and a bit of a curveball here with Trump's pick for labor secretary. Representative Chavez DeRemer is a rare pro-union Republican in Congress, and she co-sponsored the PRO Act in 2021 that would require gig companies to reclassify some of their drivers as employees. Paul Gallant is keeping an eye on those affected stocks. Paul, they don't look too sensitive on the news today. Why do you think that is?
Kelly, I think we're still probably a few months away from this actually becoming a situation where the market's like, yeah, something bad could actually happen out of this pick from Trump. I mean, unlike your discussion of Treasury Secretary Bessent, I think this is the pick for the Labor Department Secretary is not the pick the market expected or wanted for the gig companies or other parts of corporate America. She is one of the rare pro-union Republicans in Congress, and I think her announcement of Trump's pick to head the Labor Department really caught a lot of people off guard. And we'll see in a couple of months if she gets through the confirmation process. But if she does, this is going to be, unfortunately, an issue for the gig companies to keep an eye on.
So talk a little bit about the power the labor secretary will have. And other than the gig companies, where else she might be able to deploy her power and ideology, if it is supportive more of unions than we might have seen in a previous Trump or Republican administration?
Yeah, I think the big issue for the gig companies is whether the Labor Department under Trump decides it's a problem that all of the gig companies have classified their drivers as independent contractors. That's been their business model since day one. It's the reason they've exploded in popularity and the market likes them. And the concern, I think, would be with her leading the Labor Department, does she want the Labor Department to do a rethink and potentially say, no, Uber, Lyft, DoorDash, et cetera, need to start treating some of their drivers like employees? If they have to do that at the request of the Labor Department, like through a lawsuit, that would be a business model changer for these companies. So even though she is very pro-union, and I think not what the market expected, not what the gig companies wanted, for what it's worth, at the end of the day, I don't think the White House is going to defer on this policy to what she thinks. This is such an important issue. I think the White House itself is going to make the call. And remember, Trump himself ran on deregulation. That's exactly how the market has reacted the past few weeks to his election, is deregulation. So having the Labor Department go after these gig companies on this employee IC thing, that's not really what Trump ran on. And I don't, at the end of the day, think that's what his Labor Department is going to pursue.
All right, so I'm painting a whole conspiratorial idea in my head. It's Musk whispers to him, hey, you got to be pro-union because that's how we're going to broaden the party. And then he gets him to put her in as labor secretary. And then she goes after Uber. And then Uber has problems. And then that gives Tesla a competitive advantage. Boom. What do you think about that idea?
Yeah, my head starts to hurt when I think about those things, Kelly. It's a great point. I mean, when you run everything through the Trump, J.D. Vance, Musk, Republican Congress, you can come out with almost any answer you want. I mean, Musk himself, I believe, has said he is generally not a fan of unions. So to me, that's the straighter line between these points, between Musk and the president, for example. So I'd be surprised, but I don't think the people around the president are going to push him to have his Labor Department go after these gig companies on a major lawsuit that, as I said, would really change their business models.
Right. Well, because even if you...
One last point, Kelly.
Sure.
Actually, when Trump was president the first time, he actually changed the rules at the Labor Department specifically to make it harder to sue these companies for misclassifying their drivers. So as long as he sticks with his existing policy from last time, the company should be okay.
Fixed mortgage rate falling below 7% today. These are the lowest levels since the election. Meantime, Fannie Mae and Freddie Mac have been soaring since Trump's victory, both up more than 150%, as investors bet on a potential privatization push from the new Trump administration. Well, joining us now is Matt Ishbia, United Wholesale Mortgage Chairman and CEO and owner of the Phoenix Suns. And Matt, it is great to have you back on the program.
Oh, glad to be here with you.
So I do want to talk about what you are seeing in the mortgage market, because the last time you joined us was back in September, right before the Fed began this cutting cycle. And you said you expect to see a surge, that you were already seeing a surge in refinancing activity. I mean, you've come through your third quarter, biggest production quarter in 3 years. What are you seeing now, especially as rates, yes, they're back below 7%, but still stubbornly high here?
Yeah, no, absolutely. So as we talked before, you know, when the election happened, we expected some things to happen after the election. We talked even before Fed cut rates the first time, but rates were actually lower than they are today. But with what's happening now, some certainty after the election, where we're seeing the Feds going, we expect rates to come back down. Rates were 30-year fixed in the fives for a little while that I think last time we talked. And so they've went up, they're coming back down a little bit. We expect them to come down. 2025, we think will be a great year, but there is refinance activity, but it's definitely not as robust as it was back when we talked last.
It's interesting. Glenn Kelman from Redfin was on. I was speaking to him last week on the network, and he was saying that looking at the housing data, he is seeing green shoots for housing activity and sales, even as rates have been at these elevated levels. Is that what you're seeing too? What does it take to unlock that when you do look to 2025? We do talk about a strong growth outlook and a new administration coming in.
Yeah, well, definitely the new administration, I think, is definitely a strong economy. A lot of great things that are going to come from it. You know, from home inventory is up at, you know, significantly higher than it was a couple of years ago. So more houses for sale. Rates are a little bit lower, not as low as we all like, but we're seeing it trend in the right direction. And so I think with certainty now, knowing who the president's going to be, a lot of the cabinet is being picked. Like, we see that 2025 rates will come down. Do they come down to the fours? Absolutely not. Do they come down to the high fives, low sixes? We think so, which I think will create a lot of refinance activity, but also a lot of purchases, which is good for everybody.
Okay. What's the nature you expect of that refi activity if we hit the level that you expect? What kinds of products are people refinancing into?
It's going to be simple. Government and conventional loans, Fannie Mae, Freddie Mac, FHA, VA loans, rate and term refinances. Don't forget, a lot of people say, well, why would people refinance it? The rates are 3% when they are. Well, the last 3 years, people have been doing loans at 7, 7.5, and 8%. And so if you get the rates to 6.5, 6.25, or 5.99, all of a sudden there's 3 years of inventory, 3 years of people doing a couple $1 trillion a year mortgage industry, $4, $5, $6 trillion that can refinance. And so we're seeing a lot of that, start to shake loose right now. Not as much as we saw a couple months ago, but we feel it will come back in 2025.
Fannie Mae has over $4.3 trillion in assets. It's the largest company in the U.S. It's the 5th largest company in the world by assets. I mean, Fannie and Freddie are such a big part of the backbone of the U.S. mortgage market. We've seen those stocks rip higher on expectations that we see reform, maybe even privatization of the GSEs. What are you expecting?
It's going to be interesting to see what President Trump thinks and what the new FHFA director thinks. And when they make those changes, I think it was a big part of Trump's administration last time. Will it happen? Who knows? It creates a lot of money for the government right now. But I think the most important, whether it becomes private or not, the most important thing is that it actually has to create some competition. Because when Fannie Mae and Freddie Mac are competing, they're innovating. They're coming up with new products, which helps the American homeowner. If they do that, that's even better than them being private. Now, they'd probably be private and that. But either way, them innovating, them coming up with new technology, new products, new rates, new ideas, new things, that stuff really wins and it helps a lot of consumers.
And of course, you yourself are doing things like deploying AI into your business as well when it comes to the mortgage industry. I do want to shift gears a little bit here, Matt, because as we mentioned, you do own the Suns. Kevin Durant, Bradley Beal, both expected to return to the lineup.
All right. We're not gonna talk about the Suns. All right, I don't care. This guy is like, man, he's just. Of course, he wants to sell loans, man. This guy exactly sounds like the atypical guy in the bank trying to push a fucking car loan up your ass. This is the guy, man. This is that's the type of guy. That's the loan officer, right? I don't know. This motherfucker. I'm not gonna talk about the damn Phoenix Suns out here. So let's look at the two major stocks. I usually look at for a loan, mortgage loan companies. There's this one called Rocket Companies, RKT. I might have to start looking at it. I might have to start looking at this one again. It's not been a good company, but okay. And then this dude, who's the CEO of UWMC Holdings, UWM Holdings Company. So they do the loans. So let's see. And they were talking about Fannie Mae and Freddie Mac. Fannie Mae, same thing. These are penny stocks. They are traded on the OTC. So after elections, these things have been ripping. I don't know what that tells you about the overall inclinations of the mortgage loan sector, but hey, you got Fannie Mae, FNMA, and Freddie Mac. So FMCC, okay. So they're both penny stocks, I think. Like FMCC, right here. Yeah, they're both penny stocks. So they've been ripping since elections. Crazy shit. I gotta keep paying attention then. And that goes the same with the home building. So ITB, the home builder stuff I was talking about earlier. Yep, pay attention. All this whole sector. I think we're gonna have a good 2 years where the housing bubble really pumps, because the housing cycle is around 18 and a half years, and we got 2 more years. So I think housing prices will bubble up in the next 2 years. And then you'll see a crash in the coming 4 years. So probably around 2027 to 2028, look for a housing collapse after we go through this last final bubble period in housing prices. So not a good time to buy houses, I guess. But if you own a house, probably, and you need to get rid of them, maybe it's a good time to start dumping them in the coming 2 years at a good price and scoop out, take that money and scoop up houses at a better price in the coming 3 years. And we'll talk about the 18 and a half housing cycle. This is a well-known cycle. And you didn't need to be Michael Burry and figure out, there's a big a bunch of loans and collaterals and weird things going on. No, you just look at the cycles. That's how you got to do it. Okay. You guys don't need to waste your time on financial, pseudo, esoteric, blah blah stuff. You can just look at the cycles. There's an 18 year cycle to this, 18.5 year cycle to it. So we can discuss that again. You can go to the let me go find here. Go to this channel, the Foundation of the Study of Cycles, and you can look up real estate in that channel, and you can find that video. So one of these days, I'll play that one for you guys, and we can go over that. But yeah, there is an 18.5 year cycle about. Okay, that's good for that. And let me go on for another mortgage. I think there's a quick one. Quick mortgage one.
Much to the surprise of many market observers, the Fed's recent rate cutting policy has not necessarily had the impact on interest rates that many had anticipated prior to the Fed's actions. Interest rates and mortgage rates have actually moved higher after the initial cuts, leading many to question why has this happened. One of the driving factors was the anticipation of a prolonged Fed rate cutting cycle based on the Fed's message earlier in the year. However, the labor market has remained strong, and inflation has stopped moving lower, shifting these expectations and reducing the likelihood of the Fed cutting several times in the coming months. This dynamic has removed some of these expectations, shifting yields higher as the market was too optimistic for the path to lower yields. Another factor has to do with the yield curve. The yield curve has moved out of inversion and continues to normalize. This means that longer dated yields are moving higher relative to shorter dated yields. The prospect of higher yields on the back end of the curve has lifted 30-year mortgage rates back towards 7% even as the Fed funds rate moved lower. This is primarily due to the Fed's fund rate impacting short-term yields more so than long-term yields.
So go back to yesterday's stream. You saw Tom Bowley discuss the yield re-inversion, de-inversion, whatever you want to call it, and how that'll affect small caps and other things. And now we see today with the big move in housing, building stocks. I gotta be looking at mortgages now too. So lending stocks as well. I think all these things will come into play in the coming 2 years. Okay. All right. Now let's switch gears. I think we're done, huh? Yeah. So I wanted to play 1 hour of this. Let's see how long I can get through this. Let's see. Maybe we'll do half of it. All right, guys, or something like that, and we'll do the other half tomorrow.
All right. Well, greetings, everyone. This is very kind of, I think, timely. We're waiting anxiously, those in the kind of macro space, to find out who Trump will appoint as Treasury Secretary. And it's kind of important. Yellen obviously leaves in January. And anyway, today's they're announcing who it is. So I've been very, very, very focused on that. Why does it matter? The Trump trade, and by the way, none of this is political. This has to do with what's the market direction, what's the sector rotation, the stock selection related to the policies that are absolutely going to drive and have driven so far, little start here, prices. So I am very much focused on policies that dictate price. And my name is Samantha LeDuc. So for those who may not know, my name is Samantha LeDuc. I'm the founder of LeDucTrading.com. And I actually run a financial research firm as well as trade support, trade alert, all that good jazz. I run a live trading room, but I also have a team of 10 subject matter experts. And this is basically all we do all day long is focus on what is going on in the market, big picture, right down to trading, futures and day trading. So I have basically a team that specializes. So those of us who are more macro are Jeffrey and myself. He's my economics advisor and specializes very much in this monetary and fiscal world. And also, as it relates to rest of world, Hans has specialized in running funds using options. I'm a professional options trader, so that's very important to me in helping clients, whether retail or institutional, utilize options as well for alpha, as well as hedging their portfolio risk. But I have really across the board subject matter experts from oil trader to biopharma analyst, advanced options, Elliott Trade, an analyst, Gamma, you name it. So I'm very, very excited that I can kind of bring this, synthesize this for you today, which is what are we looking at and what have I been sizing up in this market given the run into the Trump election. And then what does it mean moving forward? Because right now we're in the throes of his cabinet, and there are some interruptions also in those cabinet appointments, and some have not been announced yet, like the Treasury Secretary. And then there are others that need to be approved, like Robert Kennedy, but they all have very, very big impact on market direction, sector rotation, and stock selection, which is where I focus. Then using options as an overlay technique on how to manifest those trades and define risk. Speaking of those who might be interested in this whole kind of options arena, since this is very, very much, I know, kind of a macro to micro theme that I'm discussing and the trades that support it. If you are not familiar with options, I want to invite you to check out our 3-part option video series, which is from our master options trader and educator, Hans Albrecht. We also run a Wednesday, it's called Macro to Micro Options Power Hour, where we size up, for example, not just market direction, but also earnings trades. So we have had fabulous success in Tesla and NVIDIA, and even yesterday I expect it to be a premium seller's dream, and it was. So the point is, we will talk options. It doesn't always have to be advanced options, but that's definitely the goal, is to help elevate for those who are stock traders, ETFs and indices, to elevate and learn options, then to apply it in your trading. Again, whether it is directional, whether it is income, whether it is protection. So definitely check this out. It's a free 3-part series. And I will let you know that I do have this little presentation over here on the side. Hopefully you can follow this big white area here, but this is my Slack workspace, and I was putting together some thoughts about this Trump trade, which is really, that macro to micro focus that I do in all respects. And as I just kind of mentioned, policies dictate price, but we don't really know what they're going to be. We got 59 days before inauguration. And predictions are hard, right? Especially about the future. So what I'm predicting is not always, right, going to be down the road played out. I am trying to, however, predict, because that's my job. I was very successful in calling this little, what to expect here on elections. So 30 days before the election, October 7th, I made my bet that Trump would be elected. And again, it is not my political yearning here to push an agenda or to choose a candidate because of some preference that I have. It simply was, I have a good track record of predicting. So I did this, and I do this for clients, by the way, in advance. So it's all documented. But in 2016, I predicted Trump would win, and I called it the Bubba factor. And for those of you who don't know me, I grew up on a farm. Anyway, in 2020, I predicted that Biden would win because Trump mismanaged the COVID crisis and some other things. Basically, that drawdown, we navigated just with precision, that 35% drawdown from February until March. So this is something I also came out, believe it or not, in December of 2023, when I did my year-end predictions, I should say my year-ahead predictions for clients. In other words, in December 2023, I made my 2024 predictions, and I had 5 top predictions and then a bonus. And the bonus literally said Biden would not be on the 2024 ballot. So I kind of I like this game. Then in February of 2024, I predicted RFK Jr., Robert Kennedy Jr., will trend and surprise. I did not predict that he would drop out, let alone back Trump. Now, it's very, very hard to make a call, but literally I did. Trump will win. And that's basically why I did it 30 days in advance, was to set up, okay, so how is this going to affect the market, macro, and all that jazz? And let's go back first for when I did a write-up for clients and then made this available, actually, because it was a really good, I thought exercise, where I back in literally what to expect if Trump wins the 2024 election in January, okay? Many, many, many moons ago. And my whole point was to look at the effect of inflation, since that was one area before we knew about Doge and, this government of operational efficiency and all of that, before anything was known about RFK joining, and we had no idea. My point was to kind of highlight some of the policies that would be affected. And one of the biggest controversial ones is immigration. So my point was simply to call out, not an agenda, that this was kind of important, that we had very clear immigration, right, under Biden, which was lots of folks in here to take up the labor slack, which helped pull down that inflation that was generated from both Biden and Trump spending a lot from the COVID lockdown, right? So we're talking QE, 9 trillion, monetary easing, plus the stimulus, all that fiscal spending. In the meantime, the immigration is now going to be reversed. And my point was, yes, this is going to be inflationary, but we didn't have all the consideration that we do now as far as some of the changes that could be underway as it relates to fiscal restructuring, which is a big deal. So I want to kind of just put that as a placeholder, just because Biden let everybody in and it took up the slack in the labor force, which helped keep wages from spiraling higher. Now that we have deportation of illegal immigrants going out, does not mean wages are going to spiral higher. So I want to just kind of put that out there for a little bit, because I think we have something else that is a little bit bigger theme. Let me go back to this, okay? Which is the dollar very much is going to make the weather. So let's kind of, I'm going to skip ahead here. I'll go to the map, the map in just a little bit. So when I did this January call, right, that was basically, what if Trump wins? We're going to kind of start thinking about it. And then 30 days before the election, I said, okay, now we really got to think about it. I wasn't expecting RFK to join, and, Vivek and Tulsi and Gabbard and all of these independents and libertarians and Democrats, converting and coming in to sweep the election for Trump. It was absolutely a joint team effort. But one thing that I have changed very strongly is when I did this this January write-up, I said, okay, so we can have some immigration hit on labor and, potentially cause the wages to go up. But we're going to have another issue, which is Department of Government Efficiency, Doge, is going to come in and apparently recommend a lot of cuts, right? So that's a deflationary event. Also, oil rolling over. I did not see that in January 2024. I came out in April. This is on a monthly chart of crude, and I've shown this here before. I still see crude rolling over. So I'm not talking about you get a spike because of Middle East conflict, but I'm talking about the demand for oil because of lots of substitutes, EV and solar, and just de-dollarization over in China. The whole point is the petrodollar and the lack of demand, it is causing this to fall. And so this is actually going to be potentially an economic stimulus for us. And that's not what's usual. Usually we see oil go up with yields or go down with yields. And that right now they're doing the opposite. They're going down and yields are still staying firm. So I think that's going to continue. So that is the one big difference for those who might have read that article back in January. And there's another really big difference. I think the biggest difference is this. And this is what will drive equities. I'll make this even bigger. How do I make that huge? So I actually think that one of the biggest kind of under the radar macro Trump trades that there possibly could be is the agenda that is sizing up right now to devalue the dollar to make up for high tariffs. Now, I know everyone has their opinions of whether this is really just a negotiating tactic to get 60% tariffs on China, if it's, retaliatory. No, I really actually think they're going to be negotiated as well, probably lower. And they're for the purpose of having this reciprocity, right? Why do Europe and China and other countries charge us tariffs and we don't charge them tariffs kind of thing, right? So we're going to be reversing that. And that's actually very, very helpful for helping the other countries demand less dollar. So this is going to, the demand for Dixie is basically what is going to cause that weakness. And I think that that's what folks are maybe not seeing right now. It doesn't really mean that we're going to have this happen all at once. It's a huge, we have $7 trillion transacted every day, that the dollar's not going to lose its world reserve currency. It's very, very good for countries to actually exchange with each other. It'll help us build up a trade surplus. These are all good things. I'm not so freaked out about it like some. So the point is, though, I think this is the number one thing to look out for, that in order to justify some of these high tariffs, that there will be an effort by the Trump administration to devalue the dollar, and it will be stealth and you won't feel it so much. But the point is, the idea is that by lowering demand for dollars, which, by the way, is overvalued relative to foreign currency, it will make it much better for U.S. exporters and not importers. So bring up your list of the U.S. companies that export a lot abroad, and that currency conversion in dollars is either a headwind or a tailwind on their profitability. It's a big factor. So this will help U.S. companies, obviously, as the dollar weakens relative to importers. So those in China, for example, who are trying to get their products here, it won't just be made more expensive. It will, and also incentivize for them to come in and do more manufacturing here. That's not really the end. I think the end goal is to get this industrial renaissance. And this is really why the cabinet appointments right now are so important. It's bring manufacturing and jobs back to the U.S. Now, that sounds all great, but it's the devils are in the details. And one way that this is very, very stealth is to devalue the dollar makes assets look better. So we're kind of in that right now. So we have had a very large kind of overvalued status relative to FX. And there are some things that are happening, I think, that are, I'm going to show you, hold on, that are showing themselves. For example, if the Trump macro trade is devalue the dollar to make up for high tariffs, for example, lower demand for Dixie, then to help U.S. exporters, not importers, then this is the kind of stuff that we're going to see more and more, I believe. This is going to be how countries respond to U.S. tariffs, and another way to remove demand for the U.S. dollar is that these countries will offset most of their lost trade with the U.S. simply by trading more with each other. So that's one thing. So keep that in mind. They're going to trade more with each other, and that's fine. It's also fine, honestly, that we have this recalibration, I believe anyway. There was a great interview by Stephen Mirren, who talks about how, persistently overvalued dollar, which I believe is really the target of Trump's tariffs, is going to, literally break down in the nitty gritty of how the trade and current account balances, et cetera, push the dollar up, the demand for U.S. treasuries, all of that stuff. It keeps everything overvalued. while the currencies are artificially suppressed, and why tariffs can be used to restructure the whole global trading world, which folks are getting freaked out about because they think it's linear. In other words, oh, higher tariffs, we have to pay more. But as the dollar's devaluing, you'll feel it less. Anyway, that's to be determined. The devil's in the detail how they're going to pull this off. But the point is, there are measures that they can absolutely take to lower demand for dollars. Okay, I'm not talking about a shortage of dollars and the milkshake. No, no, no. I'm talking about lowering demand of the dollars, because you know that they're not just going to, for example, in the case of the dollar yuan, which is the renminbi, they offset Trump's tariffs when he was president, POTUS 45. They literally, they had 20% tariffs and they devalued 17% so that they couldn't feel it so much. It was not so burdensome, right, for their own consumers. But guess what? 60% tariffs, they're not going to be able to devalue that much. So I think what happens to the bond market as U.S. assets are sold by foreign holders is going to be very important. So right now, this is the biggest thing that we're trying to figure out. So those who are trying to solve this puzzle, and we can't because we don't have he's not in power making policies. He doesn't even have a full cabinet yet. But the point is, the 17% of the U.S. equities market, I'm not even talking real estate or bonds, treasuries, I'm talking U.S. equities, 17% are owned by foreigners. So as they start to lose value in those assets by a falling dollar, they will also repatriate that money and go home. So there is some risk to the stock market getting a hit, but stateside, what I'm trying to kind of get at is we have, yes, an immigration policy that could be inflationary to wages, but deregulations, AI, and weaker energy prices can be deflationary. They can help offset some of this impact from higher tariffs. So hopefully we don't have a situation, however, where the falling dollar will trigger even more animal spirits in equities. And I think that's what the market is right now front running, if that makes sense. They're front running the Trump presidency because of deregulation, because of pro-growth policies, and because also of an expected falling dollar. Now, there are other ways to deal with also getting, I should say, other countries to demand less of our US dollars. And right now it's happening in spades between China and Saudi Arabia. Okay, that's a detailed little post, but I'm just going to say they're exchanging things for paper, and they're doing it to bypass, in some cases, U.S. sanctions, and in other cases, it's just the cost of conversion. So this is another way. I just saw this today. I literally just tweeted this today. The state of Texas just banned investment into Chinese companies and is forcing divestment of any state funds from Chinese companies. Now, some would have said this should have been done a long time ago. I'm not taking that position. I'm saying when the U.S. makes policies like this to force foreign entities who have ownership in equities or real estate or companies to go home, it's another way to force lower demand of U.S. dollars, which is my baseline bet for a Trump policy agenda. Does that hopefully makes a little sense? So they're going to devalue the dollar by lowering demand for Dixie, which, by the way, I would just mentioned is still really overvalued. And I think that's the focus I wanted to put out here for those who are macro-minded, and they might disagree, and that's perfectly fine because I'm working this out. At the same time, I'm running a trading room, writing up market thoughts, and trying to figure out if Trump has announced his Treasury secretary, because rates really matter, and the direction of Treasury issuance really matters. And this is also something that really matters, reducing government debt through fiscal restructuring. By the way, if they could pull this off, it'll be very impactful. It could be, short-term pain in the equity market for long-term gain. It would also help stabilize U.S. bond value, which has been falling for 3 years and has no reason to get back up if they keep spending like drunken sailors. So let's go talk about this DOGE, right? This Department of Government Efficiency, which sounds like a joke set up by Elon Musk and Vivek last name I'm not going to try and pronounce. But the point is, I want to talk about this because if they pull this off, I want to show you what it actually could mean. Okay. So this is Doge right here. Doge is $2 trillion, apparently, is what Musk was hinting at as far as a potential way to, cut lots and lots of government inefficiency, right? Because we have an exploding debt profile, which is very dangerous for forced devaluation of dollar, which we don't want, and also for falling collateral values in treasuries. So this is something where I kind of looked at this. I saw a video where he was explaining, it was a recent speech, that there are 3 nanny states that represent government bloat that need to be shut down to solve our national debt problem. And I started looking at this going, this is kind of interesting. Let me look at this. Now, whether they can pull this off is another matter, and you can make your own bets on this. I'm trying to weave this in because if I believe, and I do, that that this whole, making U.S. Exporters the power, giving them the power position, it has to go hand in hand with reducing government debt through fiscal restructuring, and all about, with the goal of bringing back an industrial renaissance. Now, this is if then, right? But let's just kind of jump ahead here. So these are the 3 nanny states that Vivek talks about. Entitlement state. That's where you've got welfare, Medicare, any type of government assistance program. He's saying attach work to it. Just stop, spending without any parameters or guidelines, but definitely there is a lot of waste, especially in Medicare. It doesn't mean, send grandma out into the cold, but the point is there are a lot smarter ways to deal with entitlement that have not been touched because politically it'd be suicide. And by the way, Vivek and Musk are not elected or not appointed. They're consultants. Trump can ignore everything they say, or he can say, good job. Now, the second area he talks about is regulatory. One thing that we kind of assume, but it's a very hot subject, is that there are many bureaucrats that are basically what I call chair warming. Vivek just says, these are 4 million bureaucrats who are unelected officials, get rid of them. And they also are making the point, both of them, that 75% of regulations are unconstitutional. I didn't know that. But again, this is their basis from which they are working to cut the fat. So remove them. That's what Vivek said. And they do not want to have any budgeting whatsoever as a government expense like foreign aid. So this is going to be hotly contested. I know this. Politically, I feel for you if this is upsetting, but I'm just saying these are the 3 pillars or legs of the table upon which Doge is setting out to cut in order to retain America's, vitality and future again. This is their spin. Now, what he doesn't discuss is how much bloat they can remove in dollar value, which is really interesting to me because Musk mentions $2 trillion in cuts, right? But I looked into this and I'm like, but wait a minute, you got mandatory spending, Social Security, Medicare. Now, granted, you can't get rid of Social Security, but Medicare, not now, but point is there are some ways you can still improve it, right? But ultimately, there is just 1.7 trillion of discretionary spending, of which half is defense. Now, I don't know if you follow their channels on Twitter, but oh my God, they're tearing apart the Defense Department for failing its audit and all the fraud. And they're going to go for some of that 900 billion. There's no question. But it really just leaves realistically about 1 trillion to restructure. So let's assume this, okay? This is all under this point number 2 that I have, right? So first is they're going to, have foreign demand of dollars fall, which helps weaken the dollar to help U.S. exporters. Number 1. Number 2, fiscal restructuring. And this is the Doge thing, right? And it's all that I have available, so this is why I'm trying to put it together. Here are some of the things we can really assume if this works. They're going to remove $1 trillion in government largesse, right? They got about $1 trillion that they can cut. They're going to remove war spending. You see, that's, I know, very contentious, but that's what they're saying they're going to do. That's what Trump is saying is going to do. Not so sure about his position on Israel, Iran. It sounds like they're very, very supportive still, but definitely not of Ukraine. So this is an area where they're looking to cut war spending. And this is also where they're absolutely targeting, remove the fraud from government budgets, specifically defense budget, remove a whole bunch of chair warmers, right? I mean, they're literally talking think about that, 4 million bureaucrats. Drive productivity, this is the positive that they're pitching, from this entitlement reform. In other words, think of this, if their thinking is, if you tie work requirements, right, to welfare, it's going to drive productivity. And if you remove these regulations, which are, they say, unconstitutional, it's going to stimulate organic growth from deregulation. So in this world, if they can pull it off, then I can imagine US bonds will actually be valued collateral again. So that would be very good if they could pull this off. What wouldn't be good are the companies that are right now delivering these government contracts, right, that has been filled with tons and tons of pork and or bloat. So I don't know if you looked recently, but some of these government contractors took a header after Trump's election. So while lots of companies were doing extremely well and happy on the Trump election, there were a few sector rotations that were very, very obvious. Defense contractors, GD and Raytheon and Lockheed Martin, they came down hard. The government contractors like SAIC, they came down hard. So you know what's working and you know what's not working. And this is just an idea of how this could continue based on what's happened most recently. What I haven't even talked about really is this MAHA. This is another one that is very hot under the collar, I know, but I'm going to bring it up anyway, because we had a situation where, this is the dollar, this is MAHA, where the MAHA trade was something that I put out there right when RFK was offered the job as Secretary of Health and Human Services. And again, policies dictate price, right? What's the trade? Well, wouldn't you know, he's got $2 trillion. Yep. So RFK Jr. basically, if Senate approved, and I know it's very acrimonious, but if Senate approved, then there are many, 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 many department agencies that he will have control over. And this is going to be actually quite an impressive hit. And we've already started to see it. Now, this is something that I've discussed already with clients for weeks now, which is stuff that's related to XLP, which is the defensive staples, right? The Coca-Colas of the world. XLV, lots of healthcare names in here, but mostly drug manufacturers. These are the biotech ETFs, for example. And these are shorts that we have been setting up in the live trading room, and they have been posted, whether it be Novartis, which is a European company in the weight loss space. This is just examples, right? Eli Lilly really, really warned that this was going to come back down and get hit. It has broken. It's on its way to 650 from 950. Any of the big drug companies, they were already hit, and the hits keep coming. I'm very, very fortunate, as I mentioned, that I work with Dr. Alexander Kenton, and he runs our Kenton's Corner of Biopharma. He writes up deep dives into biotech and biopharma space. He shares all of his trades, healthcare, hospitals, biotech, you name it. He's so good. And we benefit from that tremendously. But one trade that he suggested a while back was Merck, and it continues to fall, even before all the Trump election. But the point is, these are still going to be under distribution. This is not a safe thing to buy. I know everyone's excited about lots of these pharma companies, but they're not safe to buy when, in fact, you have someone who wants to come in and disrupt these players, get them out of media. By the way, this is another area, media companies, right? He's already announced, and Trump has agreed that, no more pharma ads, and that will hurt some sales of these media companies. Comcast, who owns NBC and MSNBC, has already said, yeah, we're out. We're going to sell these companies off, and they're going to go try and manage themselves. Anyway, the point is, there are many plays also within food processing as a short. Unilever is very diversified. We've got, chicken and Kimberly-Clark and Campbell's Soup and General Mills. So Arthur Daniels had already broken down, so it's kind of tough. But I joke, it's kind of tough to short corn syrup. But with Kennedy pushing for sugar to be used instead of corn syrup, then you can find some plays that are agricultural based, right? It's very hard to short Monsanto, which was an immediate, thought by many clients, but they were already merged with Bayer over in Germany back in 2016, and they have been suffering since. So these are hard ones to play, and any and all changes that he's going to make are going to take some time to be realized. Some of these plays had already started to come down. This is Monster, Celsius, even Domino's Pizza. It didn't stop Berkshire Hathaway. It doesn't mean that all these stocks are going to be hit, but the point is it means be more aware, right? So Berkshire, may not stay in this stock very long, but it loves big brands, and Domino's is a very well-known brand. But they also own Coca-Cola. Coca-Cola is not going to go belly up. It's just that they have maybe margins that they're going to be compressed because they're not going to be using corn syrup, which is cheap. They're going to have to use regular cane sugar. So that's a little bit more expensive. By the way, sugar producers of note are mostly in India and Brazil, and they're small regional players, and it's a little bit harder to play. I'll tell you one name that I am trend long and will stay trend long. It's called DBA, and that's further on. I'll show you that. Fluoride in the water. You probably heard this, right? That's really tough to short. Honey, let me just bring that HON is, let me just show you this. Honeywell International. Like, this is really tough to short when Elliott Management, right? This Elliott Management just came in and announced they're taking an activist role. So I'm not saying that these are going to be the best vehicles. We were already short XLV, XLP, Novo, Eli Lilly, Merck. They're working right now. They're taking a pause. He's got to still get, approved. But the point is that all of this space means it's a little bit harder to get excited about. Now, I am trend long, for example, TJ Maxx, BJ's. There are many who are trend long. Walmart and Costco, they're not going away. It might be some time to protect. But the point is, the biggest focus will be on industrialized agriculture. And that's kind of a tough play. The meat processing monopolies, right? It will have an effect on food prices eventually. But for right now, commodity prices, I don't think should be shorted. For example, DBA is that agriculture ETF. It's been a long time trend long. I think it's very well positioned to kind of take advantage for those who are not commodity traders per se. And then I know some are really getting into Kennedy being pro psychedelics and cannabis. That's not my wheelhouse, but these are some names that, they may move, but I'm not so excited about it. What I'm excited about is the macro. The macro is that he now has a $2 trillion budget. It's the single largest budget of any department in the entire government. Really, don't underestimate this trade. So big picture, he's trying to turn around a $2 trillion government organization, if approved, and it oversees a good chunk of US market cap. That's my point. And GDP. So we're not just talking, a few drug manufacturers. We're talking about the healthcare and food industry in general, and then biopharma and food processing in particular. This is not a day trade. It's something to keep in mind. But that's what I mean by, as part of the Trump trade, is really the Maha trade. And part of the Trump trade is also this recalibration of the US dollar. So I've written about this. I've talked about this when I just kind of showed you examples of how the US government will probably create some ways to reduce demand by foreign entities for the dollar. But this recalibration is actually, again, good for US exporters, not importers. Notice you'll see kind of cars, so Toyota, German, BMW, Mercedes, they're going to have, more tariffs if they don't reciprocate with Trump. So likely Germany and Japan will reciprocate with Trump, but China, of course, is has reason to worry, is basically it. So in this particular kind of focus, I'm getting really into some of the macro stuff, but there are micro considerations like the dollar. We haven't even talked about yields. I have talked about oil. I've talked about the Maha trade. This is where I'm really kind of trying to figure it out, which is right here, right? So I know, for example, that, that China is right to be nervous, right? I get this. They have not needed to unleash fiscal stimulus, and they don't plan to until they can finalize negotiations with Trump. And Trump isn't even in the White House yet. But
all right, that's enough. We'll go back to this tomorrow with China. All right. Yeah, I think you got a lot to digest there with the dollar. I think that's very interesting, the way she puts it about the dollar and how it affects things. Because if Trump plays his cards right, yeah, he can do currency manipulation to offset the problems with tariffs. That'll be very interesting to see. All right. I'll see you guys tomorrow. Prepare yourselves for some day trades. I think we're going to see some Bitcoin action. But yeah, Black Friday is where I'm targeting to go long on a lot of Bitcoin trades again into December if that works out. Otherwise, stay safe in the SOX L trade. Maybe we can look some other ones, and the bottom feeder trades I mentioned earlier in the stream, they look quite well. But if you missed some of those, you're gonna have to wait a while, I think. Oh yeah, marijuana definitely she mentioned. That could be also. There's a lot of penny stocks in the American marijuana sector. Could also be very good as bottom feeder trades, because I don't know. Matt Gaetz isn't going to be a attorney, so that kind of puts a damper on the mood right now because Matt Gaetz was pro marijuana, Bondi isn't. So you'll have to see if what Trump does, because Trump was tentatively pro weed trade, so those stocks might recover in January anyway. So that's about it. Most people don't want to. Yeah, that's why I don't even want to talk about it, HB, because you had some people here asking me about the deer thing. I mean, we used to have tariffs back in the day before income taxes. People dead long ago, buried, who remember those times. Now we're so used to having income tax, we can't even go back to the days of tariffs. That's how people used to tax things. Yeah, if you do it in a dumb way, it's bad. But I think for me showing that video, you can see that you can do it in a smart way if you know how to do it. And I think a lot of other countries have been playing us. They have been doing deals where they have the advantage and they could manipulate their own currencies, like China, which we can't do. And they've taken advantage of it. And I guess those days are about to be over if done correctly. Anyhow, all right, 2 hours. That's good. We can talk about China tomorrow when she talks about China and see what those trades are. But a lot of the healthcare stuff has been hit. And I've said again, if you find the right ones like HIMS, HIMS, you've been up 50% so far. So you got to look at some things. I also noticed a pump in electric vertical takeoff vehicles. So I'm going to have to talk about them tomorrow. They look pretty interesting. 3 stocks have been jumping up about 70% like this month. And so these could be, or 2 of them anyway, these could be the stocks that we need to add to the bottom feeder panel. So yeah, there's plenty of opportunities out there. I see them. So yeah, we'll discuss them later. All right, guys. Let me play this. Set an outro video. Donate. Yeah, please donate. I'll play this, ultra video.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.